according to FAR320. Investment property are land, building, both land and building and part of building held by the owner for capital appreciation, future undetermined use and rental to others. Investment property does not use in the production and rendering goods and services, and administrative purpose. It also not for sale in the ordinary course of the business. There are two recognition criteria for an investment property. First, there is future economic benefits flow into the business from the use of the asset. Second, the cost of the asset can be measured reliably. Investment property will be measured initially at cost. The initial cost comprises of the purchase price and other costs that directly attributable to bring the asset to its intended location and use. There is two model for subsequent measurement of an investment property. The first model is cost model. The measurement of the asset will be at cost. The asset also needs to be depreciated over its estimated useful life. Depreciation for the current year will be treated as expenses in the statement of the profit or loss. The second model is fair value model. Assets will be measured at fair value or market value. No depreciation will be made for the asset. Any gain on the fair value will be revenue in the SOPL. But if there is loss on fair value, it will be expensed off SOPL.
Property with ancillary service. It is when the reporting owner provides ancillary services to the occupants. When the services are relatively insignificant component of the arrangement as a whole, then we will recognize the assets as investment property. But when the services are more significant component of the arrangement as a whole, then we will recognize the assets as property plant.
Investment property can be transferred or transfer from the other asset. First, it can be either transfer from investment property to property, plant and equipment, or vice versa. Second, it can be either transfer from investment property to inventory or vice versa. How to treat building that part of it being rent out to other or vacant and the other parts being used for owner occupied. 10% rule is an example to show significant or insignificant the part of owner occupied. First, if owner occupied space cannot be sold separately, then the building can be recognized as investment property. Second, if owner occupied space can be sold separately, then the building can be recognized as property, plant and equipment. Derecognition. When to do derecognition? Derecognition can be done on disposal of the assets, and when there is no more future economic benefit expected from its disposal. How to do derecognition? First, compare the carrying value of the asset to be disposed of with the net disposal amount. Second, the differences can be either gain or loss on the disposal. Third, gain on disposal will be revenue in SOPL. Loss in disposal will be expenses in SOPL.
Created using Powtoon.